Hello and welcome to Business Incorporated, coming to you live from Lagos, Nigeria. Merry Christmas. I'm Chimeze Obi Iwago. On the program today, markets in the Middle East, Japan and China open for business as others close for the Christmas holiday. Kuwait Petroleum Corporation signs 15-year liquefied natural gas import deal with Royal Dutch Shell. Plus, a recap of what businesses were like in most parts of the African continent ahead of a Christmas holiday. We'll get started now with the markets, and here on the African continent, only the market in Egypt is trading today. The EGX 30 was up 0.36% at intraday. The other markets are closed for the Christmas holiday. Here in Nigeria, the stock market closed in the green on Friday, 0.45%. In South Africa, the index was also up. The JSE All-Share Index ticked up 0.05% to 58,800 points. Kenya was also up 0.15%. In the Middle East, markets were trading even as other markets closed for Christmas holiday. Stock markets were mostly quiet in thin trade at intraday, although Abu Dhabi-listed Dana Gas jumped ahead of a court hearing on its effort to avoid redeeming $700 million of Islamic bonds. Abu Dhabi's index gained 0.30% as Dana jumped to 11.8%. It was the market's most heavily traded stock. A court in the Emirate of Sharjah was expected later on Monday to hear a case in which Dana is seeking to have its sukuk declared invalid under United Arab Emirates law. Dubai's index was up 0.18%. Amusement park operator DXB Entertainments lost 1.6%. But Union Properties, the most heavily traded stock, climbed 2% after saying it planned to list its Servio Facilities Management Unit in Dubai in the second half of 2018. In Saudi Arabia, the index slipped 0.35% as Najran Cement dropped 2.4% after its board decided to halt its third production line, which has a daily capacity of 6,500 tons, and restart its second line with a capacity of 3,000 tons because of high inventories of clinker. In Qatar, the index edged down 0.05%, but Qatar First Bank, the most heavily traded stock, rose 3.2%, continuing a rebound from record lows that began in late November. And in Europe, markets posted declines during Friday's trade as investors digested the latest in political and economic news before finishing off for the Christmas break. The UK's FTSE 100 closed down 0.15% in a shortened session. Germany's DAX and France's CAC 40 were trading lower as the UK market closed. Overall, banks posted big declines on Friday, with Spanish lenders falling to the bottom of the index after the Catalonia news emerged. In individual stock news, pharmaceutical firm Roche and Ignite announced on Friday that it had entered into a definitive merger agreement for Roche to fully acquire the U.S. biotech firm for $1.7 billion, paying $25 per share for Ignite. Also, Germany's Innogy announced that it was advancing its strategy in renewable expansion into the U.S. market by acquiring an onshore wind pipeline of more than 2 gigawatts. In data news, the Office for National Statistics confirmed that gross domestic products in the UK had grown by 0.4% on the quarter, highlighting how British households had increased their spending at the slowest annual pace in some 5 years. And in the U.S., the Dow Jones Industrial Average and the S&P 500 posted gains for the fifth straight week on Friday after President Donald Trump signed a bill that revamps the U.S. tax code. The 30 stock Dow climbed 0.4% this week, while S&P 500 gained 0.3%. The tech-heavy Nasdaq Composite Index notched a 2-week winning streak. The major indices closed slightly lower for the day on Friday, however. Now, Trump signed Friday that slashes the corporate tax rate to 21% from 35%. The president was able to sign the bill after Congress approved another bill to keep the federal government funding through January 19. Investors have been eagerly awaiting this as they bet that lower taxes will boost companies' bottom lines. Jill Malandrino, VOA Channels TV business correspondent, has the details.
Happy holidays from the NASDAQ market site. I'm Jill Malandrino, and Christmas came a few days early for President Trump with the passing of the tax bill on Wednesday. This was the biggest legislative achievement of Trump's administration in 2017, with the most sweeping overhaul of the U.S. tax system in more than 30 years. An estimated $200 billion in tax relief will enter the U.S. economy in 2018, which will be the largest since the 1981 Reagan tax cut. Some investors expected the passage of the bill to be a sell the news kind of event, yet the market is trading at all-time highs. So while the tax bill was a convenient excuse to justify the run-up in stocks, I would argue that an improved economy and strong corporate earnings are truly the fundamentals behind the run in U.S. equities this year. Companies are flush with cash, and I think that will lead to increased buybacks and dividends, M&A activity, and investment in R&D, because there's finally some clarity around taxes and how that will impact the balance sheet. And clearly, this bill is a huge bonus for corporate America. The reduction in corporate taxes to 21% from 35% will be impactful to S&P 500 profitability, and that means consensus estimates are likely to increase in the coming weeks as analysts reassess their forecasts. Banks should benefit from the possibility of higher market interest rates, lower tax rates, and reduced regulation, which could also boost lending. Small caps, it's another group that's going to benefit in the coming year from lower tax rates and a stronger dollar. Now, this market has been characterized by cautious optimism, and the handoff from monetary stimulus to a fiscal stimulus could potentially be a tricky one. However, with major equity indices hitting historical highs, investors seem increasingly confident in the growth prospects from U.S. companies. Now, while prices in 2017 were supported by improving fundamentals and expectations for fiscal stimulus, stock markets in 2018 are likely to hinge on the successful implementation of the new tax policy. The S&P 500 now has had a fantastic year. It's on track for having a perfect year in 2017, with every single month delivering positive returns. While there appear to be some ample tailwinds for equity prices heading into 2018, it could be difficult replicating that perfection. Happy holidays and Happy New Year from the NASDAQ market site. I'm Jill Malandrino.